Welcome back, everyone. It is Monday, January 8th, after market hours. Appreciate you joining the NYU Grads Daily Podcast. Hope you had a great weekend. Let's jump right into it. We'll cover breadth first. As you know, I like to do. We had 288 new highs versus 180 new lows. For advanced declining, we had 73% advancing versus 23% declining, so heavily sided to the bulls. And for the 50-day moving average, we had 20% below its 50-day and 32% below its 200-day moving average. We were down markedly pre-market hours. The Dow was selling off. Once we opened, it fought back all day across all indices. And I would say right around lunchtime, the Dow started to go positive. The NASDAQ and the S&P were green the whole day, and the NASDAQ was the strongest. So the Dow was up 216 points today, up 0.5% basically. The NASDAQ was up 319% today, up 2.2%. Monster move. S&P 500 up 66 points, or 1.4%. Taking a look at the group sector, like the sectors, everything was green except for energy. So total 180 from Friday. Technology, as I mentioned, led, but you had communication services and consumer cyclical right behind, with real estate up as well, very strong today. Very curiously, though, yields fought back all day, and we actually closed the 10-year yield above 4%. So you've heard me say this before. One of them is lying. Either the yields have to get softer in anticipation of all these rate cuts, or risk assets have to come down. They both can't rise forever together. Let's just say that. Right now, there's a lot of animal spirits because there is great anticipation about the spot Bitcoin ETF that is apparently expected to get approved. Everyone is saying on Bubble Vision that the chances are very high and low risk that this spot ETF will be approved this week. And that has brought animal spirits to the markets, as well as just crypto in general. I'll share with you all a screenshot of some of the most popular crypto coins, and Bitcoin itself is at 47,000 right now as of 7:18 p.m. New York time. It is up 7%. Obviously, Bitcoin volume is going to be the highest. The volume in the last 24 hours, $19 billion of trading volume. Ethereum was hugging the 50-day precariously, but it was also up 5% today. And you can take a look at all the cryptos. They're all just in the green right now. And taking a quick look at charts today, if you look at the Magnificent Seven, I'm just going to walk through each one. Apple ironically was the weakest in the past few weeks, and it was not only below the 50-day, but it was testing the 200-day moving average. The last time I did that was back in October, November of 2023, and the 200-day moving average is just above this long-term trend line that goes back to 2003. So Apple bounced today. It's up 2.4% on the day. But if Apple breaks the 200-day to the downside, it will simultaneously break this 21-year trend line. So it has to hold. It has to hold. Looking at Amazon, 3 sessions ago, it was sitting on the 50-day moving average. It tried to bounce on Friday but couldn't, and today it finally was able to make a move up away from the 50-day. So Amazon was a stick save. Google still above its 50-day moving average. You look at Meta or / Facebook, it is still above the 50-day moving average. Microsoft, similar story to Amazon. It was sitting on the 50-day 1 session ago last week. Today it was able to bounce off of the 50-day. Very important that they all did this. Nvidia is making new lifetime highs, and Tesla is sitting on the 50-day. So there's no panic here for the Magnificent 7. Breadth is not terrible. It's like 50-50 for new highs versus new lows. So there's nothing to panic on breadth yet. And yields are below 4.5%. If you recall, these were my 3 pillars to watch for when we were rallying and then sold off really hard into November. And then November, when rates plummeted, these 3 pillars were still the pillars for me to watch, and they remain the 3 pillars to continue to watch. It is the Magnificent 7, yields above or below 4.5%, and daily breadth research. So that still remains the case. I do want to kind of share with you guys that I will be sending out private emails to the pledgers because the premium service hasn't launched yet. So whenever I do have specific alerts in the coming days and weeks, I will be sending a pledger group only email out. And an example of this would be ARC Innovation, which I posted over the weekend, saying this is a perfect range-bound initiative setup. Whether you're bullish or bearish on the markets, it's totally up to you. It gave you a perfect risk reward, areas to put in a stop. The risk was very low, and the potential opportunity was fairly large. And right now, ARC Innovation is breaking out up initiatively out of that range. So that was a decent call by some of the formulas and trading parameters that I'm following. I always hunt for ranges like that where it's defined risk, defined reward with easy to spot entry and exit points. So as I spot more of these on my list, I will share with pledgers privately. With that said, you'll notice that today's podcast is numbered 114 versus 113. I'm doing this on purpose. I skip the number 13 to avoid any bad fortune or bad luck. So that's why I'm skipping this number. I'll see you guys after the Tuesday session. Oh, before I forget, keep watching for yields. Keep watching for animal spirits around Bitcoin's ETF approval. There's a very important CPI report coming out Thursday with PPI on Friday. All right, I'll see you guys after the Tuesday session. All right, bye.